Ever witnessed a crypto token's rapid descent that leaves even the most ardent believers questioning its future? Today, we're dissecting the dramatic plunge of Picoin below 70 cents amid a storm of KYC controversies, dwindling volumes, and community uproar. If you're ready for a deep dive into the mechanics behind this collapse and the spark that might ignite a recovery, keep watching. Hey, crypto connoisseurs and digital trailblazers. Welcome back to TJ Crypto World Channel, where we peel back the layers of crypto market mysteries and explore the intricate dynamics of blockchain projects. Today we are unraveling the explosive narrative behind Picoin's recent nosedive and the controversies fueling its decline. Before we dive in, here's what you can expect. We'll break down the specifics behind the price drop below 70 cents, analyze technical charts for potential support and resistance levels, and uncover why community members are growing restless over transparency and leadership. And yes, we'll also discuss the controversial KYC updates that are sending shockwaves through the ecosystem. Make sure to like this video and subscribe. If you're passionate about cutting-edge crypto insights, you won't want to miss any of our future updates. Let's set the stage with the stark reality. Picoin's price has sharply fallen below 70 cents, a level that has now become a symbol of uncertainty for this project. Over the past week alone, Pi lost nearly 20% of its value, a dramatic decline that has rattled both investors and community members alike. This isn't a mere market blip, it's a seismic shift signaling deeper issues within the ecosystem. The price plunge, a multifaceted crisis. First off, the steep drop in Picoin's value isn't happening in isolation. This decline is accompanied by a palpable frustration among community members and a significant drop in trading volumes. Daily transactions have tumbled by a staggering 52%, falling to $148 million, which is a clear sign that market interest is waning. With Pi trading nearly 77% below its all-time high, doubts about the network's long-term viability have reached a fever pitch. Technical analysis reveals that the token is flirting with a critical support zone around 60 cents. Analysts are watching this level closely because it could serve as a lifeline or signal further decline. On the flip side, a breakout above 72 cents is seen as essential for establishing a bullish trend. Without overcoming these resistance levels, any recovery remains tentative at best. Community dismay and leadership concerns. What's fueling the fire, aside from the raw numbers? A significant part of the issue lies in community sentiment. The PiNetwork community is buzzing with discontent over what many perceive as a lack of clear, consistent communication from the Pi core team. Despite initiatives like PiFest, which were intended to rally the community and showcase development progress, skepticism continues to mount. Users are vocal about the opaque nature of the project's leadership. Monthly updates, often vague and insufficiently detailed, leave many feeling disconnected from critical decisions affecting the network. This communication gap has eroded trust and led to calls for a leadership overhaul, one that brings robust crypto expertise and a renewed commitment to transparency. Adding to this unease is the declining Pi mining rate. The rate fell by 1.18% to 0.00293030 Pi per hour. For a network where mining rewards serve as both an incentive and a metric of growth, this reduction is more than just a number, it's a tangible indicator of waning interest and operational slowdown. Investors are questioning whether the diminishing rewards could discourage new adopters and further weaken market confidence. KYC controversy, privacy in the crosshairs. In parallel to these challenges, PiNetwork's approach to Know Your Customer, KYC, protocols has sparked its own firestorm of controversy. The recent imposition of email-based two-factor authentication, 2FA, as a substitute for SMS verification has not gone down well with many users. While this move was intended to resolve regional SMS issues, it has instead ignited fierce debates over privacy and data security. Critics argue that this mandatory KYC upgrade contradicts the very principles of decentralization and user autonomy that many crypto enthusiasts hold dear. The insistence on rigorous identity verification, seen by some as overbearing, has further fueled speculation that the project might be straying too far from its core decentralized ethos. These allegations, ranging from claims of operational inefficiencies to outright accusations of being a scam, have intensified selling pressure on Picoin. With each controversy, investor confidence takes another hit, and the token's future becomes increasingly uncertain. Technical signals, what the charts reveal now, Let's zoom in on the technical analysis, where the numbers and charts speak volumes about market sentiment. The current bearish trend is evident from several key indicators, support and resistance levels. PiCoin appears to be testing a support level at 60 cents. For a sustained recovery, breaking through the 72 cents resistance is crucial, but market conditions suggest that a failure to hold above $0.7100 could result in a further decline towards $0.6900. Chart patterns: the market is hinting at a falling wedge pattern. Traditionally, this pattern might indicate a reversal if the price manages to breach certain resistance thresholds. However, caution is warranted. Without decisive action, this pattern might simply accelerate the downward momentum. Volume trends: with trading volumes dropping by over half, the market's appetite for Pi is clearly diminishing. This reduced liquidity makes it increasingly difficult for price movements to gain traction, further hampering any potential rally. Looking forward, can PiCoin recover? Amid this turbulence, a question looms large: can PiCoin bounce back? Some market analysts remain cautiously optimistic, suggesting that if the token can break key resistance levels and regain the community's trust, a recovery might be on the horizon. A bullish reversal could see PiCoin inch its way back toward a critical threshold near 73 cents, potentially igniting renewed investor interest. Yet, the odds are stacked against a swift recovery. With the combined challenges of reduced mining rewards, a contentious KYC process, and ongoing leadership frustrations, any turnaround would require a fundamental shift in strategy. The project must address these issues head-on, improving transparency, reinforcing its commitment to decentralization, and actively engaging with the community to restore confidence. Until these steps are taken, the token might remain trapped in a bearish cycle, with the possibility of further declines. If you're finding this breakdown as compelling as I do, now's the perfect time to hit that like button and subscribe to TJ Crypto World channel. Your support keeps us motivated to bring you the most incisive crypto analyses and market insights. And don't forget to ring that notification bell, you'll never miss our next deep dive into the ever-evolving world of cryptocurrency. Summing it up, the road ahead for PiCoin. In summary, the recent collapse of PiCoin's price below 70 cents isn't merely a market correction, it's a reflection of deeper structural issues. From a shrinking mining rate to an increasingly skeptical community, and from controversial KYC measures to dismal trading volumes, every indicator is painting a picture of a project at a crossroads. For those who've invested in or followed the evolution of PiNetwork, these developments are cause for serious concern. The token's technical outlook suggests that the coming days will be critical. Trading near support levels around 60 cents could either mark a turning point or signal further decay. Meanwhile, the community's growing disillusionment with the project's leadership and transparency only compounds these challenges. For PiCoin to regain its footing, the project must undergo a dramatic transformation. It's rethinking its governance model, offering clearer and more frequent communication, and addressing the privacy concerns that have become a hot-button issue. Until these changes materialize, the bearish sentiment in the market is likely to persist, and the price could remain volatile. Thank you for sticking with me through this comprehensive breakdown of PiCoin's recent challenges. I appreciate your dedication to understanding the nuanced dynamics at play in today's crypto markets. Your engagement and critical thinking are what make this community so vibrant and insightful. If you found this deep dive valuable, please give this video a thumbs up and subscribe to TJ Crypto World channel. I encourage you to check out our other videos where we tackle the most pressing issues in the crypto universe, from groundbreaking blockchain innovations to in-depth technical analyses of emerging tokens. Every video is designed to equip you with the tools and knowledge to navigate this complex and exhilarating landscape. It's been a pleasure guiding you through the turbulent waters of PiCoin's price drop and the controversies swirling around it. Let's continue to stay informed, challenge conventional wisdom, and push the boundaries of what's possible in crypto. Until next time, keep your strategies sharp and your curiosity alive. Don't forget to leave your thoughts in the comments below. What do you think is next for PiCoin? Let's ignite a discussion and explore the future together on TJ Crypto World channel.